You're watching today's video technical update presented by FX Times. It is Tuesday, May 4th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex markets. There were some big moves today. I'll take a look at the Euro dollar, Euro pound, dollar yen, dollar Canadian dollar, and the Aussie dollar. Risk aversion gripped the Forex markets, but some currencies were more resilient. Let's see what we can expect to follow up. This video is being produced at about 5 p.m. Eastern Time after the close of today's US session. So what's going on with the Euro dollar here? We all know that there's a Greek default risk problem. Technically, we see that the market continues to be pressured. The euro continues to be pressured. Every attempt here to rally has been thwarted, and we could see these attempts thwarted in the RSI. You see the RSI gets higher. There's stronger push, but the price level does not make higher highs. So this is called a negative reversal, and here we saw this last week with this projection. This week we have another one where we would use this length and project it, and you see 1.0360, 1.3060, 1.3050 was our target, and it has already been reached, and the market doesn't even give consideration to this area. It's not a support area, it's just a target for this projection. So the market continues, and now let's see what our next target could be. Looking at the daily here, we see a possible, very likely impulse wave here, and if we have wave 1 and wave 5 equality, here would be 1, 2, 3, 4, 5. Okay, so now 5 would bring us to, let's take a closer look here, or just simply click on this, bring us to around 1.2750. okay, 1.2750 is this swing projection. If the market could actually continue and test our low here around 1.25, so 1.25, 1.27 seems to be the support area, and the market is quickly approaching that area now. Okay, so that's the euro dollar. I would not be I would wait until the market reaches this area to see if there's a bottom, and then if it could break below 1.25, then it opens up the bottom for this pair. Let's turn our attention to the euro pound pair. As you remember, we had this pair go down to the 0.8650 area, and the market actually consolidated right around that area, testing this rising support of this congestion pattern. Now the market broke below the support, and what we should look for now is where this market may be supported. So on every rally that doesn't violate our bearish outlook, we should anticipate another swing towards these levels. So this first level is here at 0.84, his previous low here, really 0.84, 0.8450. This low here seems to be able to provide support. This is an important power zone here. Now the next one would be the 78.6% at 0.817 area, and this actually shares the low here. I'm sorry, it shares the low of here and shares this high here. So this is the next important support area. Okay, so again, we saw the market break out of this consolidation, as we can see here. So a simple, very short-term projection is this. Okay, so the 0.85 area. So once again, looking at the daily, you see this 0.85 area, just above 0.84. This is a power zone. If the market breaks below that, it should find some support here at the 0.81, or what is it, 0.8170 level. Okay, that's the euro pound pair. Let's take a look at the dollar yen. We talked about the targets and all today. Let's talk about confirmations, because there's been a lot of pullbacks in the dollar yen, and a lot of that is caused by risk aversion. Every time there was some risk aversion in the market, Goldman Sachs, Greece, all these major themes, you saw a pullback. And then you see this last week here. We had a pullback on Friday here, where the RSI came down, broke below these previous bottoms, made a little W here, and came back up. So this is a very strong bullish signal after this type of RSI movement, which shows you a bullish trend. So this shows you a correction. That's a strong correction, while the price level shows you that it was not as strong. You see, this is the Friday action right here. You see, right before that we had a breakout, and then the market said not so fast, came back down, tested this, almost tested this low before returning, turning back up. So this actually was very bullish, a very bullish signal. And today we had further risk aversion, actually, and the market still is supported, actually right above or at this previous high. So it looks like this wave of pullbacks is actually tested, and the market is confident about the dollar yen. Regarding targets, if we see this as of okay, so this is the daily time frame, and this is the low last year. If the market is a 1, 2, and this is third wave, at least there should be some. At least this should be 1-to-1, bringing this up to around 97, 98 area. Another target as the 1. Okay, so this is actually that same target. You see the confluence of that target, and actually a further target. You see another confluence. This is 50%. So again, the next target would be this high here, 61% retracement of this swing, of this entire swing, and that would be around the 100.1 area. Okay, so targets at 98 and 101. And before I finish off with this pair, actually there's one more positive divergence here that also confirms our bullish outlook. Here's a lower low in RSI than this one, and here's a higher low. So what we could do is project this like this, and you see that it's 97. So look for this market to go to 97, 98 area in the short term. Here's a look at the Aussie dollar pair, and if you remember, you've been following my posts and updates, I've been very bullish. This is 1, 2, 3 waves, and this is a correction expected to be larger than these previous corrections as it is of a higher degree. Today's action, though, this is a risk-averse decline, and the risk aversion is bad for commodity currencies such as the Aussie, Canadian dollar. So here we have a slide. We are at 38.2% of this rally, and the next support appears to be 0.90 area, this 200 moving average area. So look for the market to continue to slide, which in the 4-hour time frame, we had a wave count here, possibly a breakout here. So we anticipated this breakout, but the market didn't sustain a rally. Instead, it came back down, and this is now actually more than 161.8 or 162%. You see, this is 100%, and if we move this down here, put the 161.8 to this next high, this projects the 161.8% to 0.91. So there was no support here. The market didn't even bat an eye and continued to decline. So look for the market to find some support in the next Fibonacci levels. That would break below 40 here in the RSI, and we should reconsider the bullish outlook with that action. We should be reconsidering it at the moment. Looking at the Canadian dollar, also here, if it breaks above 60, reconsider the bearish mode. a little short-term projection could be as such. You see this is the height and the top to bottom of this double bottom. So if we project it up, they should go up to about 1.05. This is a very crude method. You should probably use your actual price data here. I'm just showing you the crude method of this projection, and it would test our 200 moving average as well. Maybe test this previous low here before we find the top. Okay, so in short term, wait for the market looks like it will continue here to 1.04, 1.05, here to 0.90. You can see that here. And that wraps it up for today. Check out fxtimes.com tomorrow for the Charters Corner strategy session.